You Can Be a Stock Market Genius, Uncover the Secret Hiding Places of Stock Market Profits by Joel Greenblatt is a classic book on value investing in special situations. It provides a practical guide to identifying hidden investment opportunities that can lead to outsized returns. Greenblatt breaks down complex financial strategies into easy-to-understand concepts, empowering individual investors to think independently and capitalize on inefficiencies in the market. Below is a detailed, narrative-style summary of the book's key ideas. Introduction: The Road Less Traveled. Joel Greenblatt begins by addressing the common misconceptions about investing. He asserts that most investors follow conventional advice, such as investing in index funds or mimicking the strategies of mutual funds. While these approaches can yield average results, Greenblatt argues that superior returns require a more unconventional approach. The central theme of the book is the identification and exploitation of special situations, investment opportunities that arise from corporate events like spin-offs, mergers, bankruptcies, restructurings, and recapitalizations. These situations often create mispricings in the market, offering savvy investors a chance to profit. 1. Spin-offs, the hidden gems of the market. Greenblatt emphasizes the value of spin-offs, where a company separates a division or subsidiary into a new, independent entity. These events often result in significant mispricings because institutional investors may sell shares of the spin-off company automatically, either due to size constraints or because the new company doesn't fit their investment mandate. He explains that spin-offs frequently outperform the market because 1. Management of the new company often has strong incentives to create value. 2. Spin-offs tend to focus on their core businesses, improving efficiency and profitability. 3. Investors can buy these shares at discounted prices due to initial selling pressure. Greenblatt provides detailed examples of successful spin-off investments, such as Marriott and Liberty Media, illustrating how careful analysis of these opportunities can lead to significant gains. 2. Merger securities, special opportunities in M&A. Mergers and acquisitions, M&A, often create unique investment opportunities through securities such as stub stocks, rights offerings, and contingent value rights, CVRs. Greenblatt explains how understanding the structure of these deals can uncover profitable trades. He highlights the importance of reading the fine print in merger agreements and staying informed about the motivations of the companies involved. Investors who can navigate the complexities of M&A deals can often find low-risk, high-reward opportunities. 3. Risk arbitrage, betting on the odds. Risk arbitrage, also known as merger arbitrage, involves buying the stock of a company being acquired and profiting from the spread between the current price and the acquisition price. While this strategy requires careful assessment of the likelihood of deal completion, Greenblatt argues that it can be a lucrative niche for investors willing to do the homework. He provides a step-by-step guide to evaluating merger arbitrage opportunities, including analyzing regulatory risks, financing conditions, and the strategic rationale behind the deal. 4. Corporate restructurings and bankruptcies. Greenblatt discusses how corporate restructurings and bankruptcies often lead to significant mispricings in the market. Companies undergoing these events are typically avoided by institutional investors, creating opportunities for contrarian investors to buy at a discount. In bankruptcy situations, Greenblatt advises focusing on companies with strong underlying assets or businesses that can emerge stronger after restructuring. He shares examples of successful investments in distressed companies, demonstrating how careful analysis of balance sheets and recovery plans can uncover hidden value. 5. Leaps, warrants, and other securities. The book delves into lesser-known investment vehicles such as leaps, long-term equity anticipation securities, warrants, and other derivatives that can provide leveraged exposure to stocks. Greenblatt explains how these instruments can amplify returns when used judiciously, though they require a deep understanding of their risks and mechanics. He also discusses situations where companies issue special securities, such as convertible bonds or preferred shares, which can offer attractive risk-reward profiles if analyzed correctly. 6. Recapitalizations, leveraging success. Recapitalizations, where companies restructure their balance sheets by issuing debt or buying back shares, often create investment opportunities. Greenblatt explains that these moves can signal management's confidence in the company's future and often lead to increased shareholder value. He provides examples of companies that used leverage effectively to drive growth and profitability, cautioning, however, that leverage is a double-edged sword that must be evaluated carefully. 7. Institutional constraints and the individual advantage. One of the book's key themes is that individual investors have unique advantages over institutional investors. Large institutions often face constraints, such as mandates to avoid small-cap stocks, spin-offs, or distressed companies, that prevent them from exploiting certain opportunities. Greenblatt urges individual investors to embrace these niches, where competition is lower, and potential returns are higher. He emphasizes the importance of thinking independently and avoiding herd behavior. 8. The importance of research and homework. Throughout the book, Greenblatt stresses the importance of conducting thorough research. Successful investing in special situations requires a deep understanding of the companies involved, their financials, and the motivations behind corporate actions. He provides practical advice for reading SEC filings, such as 10-Ks, 10-Qs, and proxy statements, to uncover critical details that others might overlook. Greenblatt's mantra is that the more you know about a situation, the better your odds of making a profitable investment. 9. Managing risk. Greenblatt acknowledges that special situation investing involves risks, but he argues that careful analysis and diversification can mitigate these risks. He advises building a portfolio of special situation investments to spread exposure across different types of opportunities. He also emphasizes the importance of maintaining a margin of safety, a core principle of value investing that involves buying assets at a significant discount to their intrinsic value to protect against potential downside. 10. The psychology of special situation investing. The book addresses the psychological challenges of special situation investing. Greenblatt notes that these strategies often involve going against the grain, enduring short-term volatility, and maintaining conviction in the face of skepticism. He encourages investors to develop a disciplined, long-term mindset and to focus on the process rather than short-term results. Success in special situation investing requires patience, curiosity, and a willingness to do the work. Conclusion: you can be a stock market genius. Greenblatt closes the book with a motivational message: individual investors have the tools and opportunities to achieve extraordinary results if they are willing to think differently and put in the effort. By focusing on underfollowed niches and applying a systematic approach, investors can uncover hidden gems in the market. He reminds readers that successful investing is not about predicting the future but about finding situations where the odds are overwhelmingly in your favor. With curiosity, discipline, and a commitment to learning, anyone can develop the skills to become a stock market genius. Key takeaways. 1. Spin-offs and special situations. Focus on corporate events that create mispricings and opportunities. 2. Thorough research. Success depends on understanding the details of each opportunity. 3. Individual investor advantage. Use flexibility and freedom to exploit niches ignored by institutions. For margin of safety, always buy at a significant discount to intrinsic value to limit risk. 5. Patience and discipline. A long-term mindset is essential for enduring volatility and achieving superior returns. You Can Be a Stock Market Genius is both an instructional manual and a motivational guide. Greenblatt demystifies complex financial strategies and empowers individual investors to take control of their financial destinies. By exploring overlooked opportunities and staying disciplined, investors can unlock the potential for extraordinary success in the stock market.